What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, this might be the wildest thing I have ever seen, and also maybe the stupidest thing I've ever seen. You can get a credit card that is backed by the equity in your car. We're going to talk about the pros and cons behind it, most of the cons here, compare it to what is called a home equity line of credit, and talk about probably why this doesn't make any sense to a lot of us here. So if you are excited for today's video, or just really curious to hear what I have to say about this idea, make sure you like the video, subscribe to the channel, and as always, turn on those bell notifications for all future uploads. So what we're looking at here is a website called Yendo. Now, Yendo is the first credit card backed by your vehicle equity. And we're going to talk about what the problem is with having a credit card backed by your vehicle equity. It works like a regular MasterCard, but taps into your vehicle equity to get higher limits at affordable rates. Wow, that sounds amazing until you look more in depth behind it here. So this is almost like what you think of, which is a home equity line of credit. Now, the idea behind a home equity line of credit, which is what's called a HELOC, if you've ever heard of it before, this is what it is. Basically, what a HELOC is a type of secured loan, meaning that as a borrower, you offer some type of asset, keyword, asset, as collateral. For a HELOC, your home is the collateral. Now, a home is considered an asset because as time goes on and the dollar becomes worth less and inflation moves up more, your house becomes worth more than what you bought it with. You might be talking to your grandparents. They might have said, I remember when I bought my house back in 1975 and I bought it for $25,000. It's worth $1.2 million now, right? That's because it's an appreciating asset. As the dollar goes down, you need more to then buy a house, and that means it costs more than what it does today in the next 5, 10, 20 years. By using your home as collateral, you're giving the lender confidence they'll be repaid, because if you don't repay it, they can come and take your house, and you do not want that. So that's the confidence that they're talking about. Like, you probably are going to pay this back, which can make it easier to qualify and may result in lower interest rates than other types of credits, such as unsecured loans or credit cards. Very interesting. In practice, a HELOC is similar to a credit card. It gives you access to a set credit limit, and you can borrow as much as you need. You only pay interest on the amount you use, not the full credit limit, which is great. So even if you qualify for $40,000 and you only borrow $10,000, you'd pay the interest on the $10,000, not the $40,000 entirely. Very, very important. You can no longer borrow, and your monthly payments include both principal and interest. Again, you can often take 10 to 20 years. And what can they be used for? You can do anything from a home renovation and repairs to education expenses, debt consolidation, business investments, medical expenses, whatever it is you think of. You basically can use it as almost anything in terms of what you need money for. So if you want to put the money back into your home to renovate and to upgrade, you can do it that way. You want to pay off college or any kind of student loans, you can do that if you want to. You can consolidate your debt if you need to. There's a lot of different things you can do it for. Now, the one thing that they say you shouldn't use it for is for those like high-end short-term purchases like vacations, electronics, impulse upgrades. It's one of those things where people usually will have is that as you get more and more money, you tend to spend more as a result of it. So don't do that because you have more money available. Do not go out and spend more because you have access to more. That is a big problem. HELOCs are good if you have a strong credit score, you have significant equity in your home. Equity is basically the difference between what your home is worth in the market and what you owe. So if your house is worth $500,000 and you owe $280,000, for example, random numbers, I know, you would basically have equity of $220,000 in equity. Okay, so this is really important to keep in mind about. Other things are you have to also have a low debt to income ratio, because they want to make sure that as a lender, they can see that you can manage these payments and not freak out and not have a chance of defaulting on your loans. So, debt to income ratio below 40% will position your strength when shopping for a HELOC. So they're very, very important. So that's basically what a HELOC is. Basically, you get a loan against your house. You could use it for wherever you want, and usually get a pretty good interest rate. I've seen like 7%. I've seen 10 to 11, maybe even 12%, maybe depending on the markets. So it's not crazy low interest. Depending on what you qualify for, everybody's different, obviously. But even if you get it at 7%, that's pretty okay compared to the market and to credit cards and stuff like that. So HELOC is pretty good. And again, your collateral is an appreciating asset, which is good. Keep that in mind because Yendo is different. Now, with Yendo, you can get your offer in under 1 minute. Wow, that's amazing. Get $10,000 in credit, up to $10,000. Wow. Unlimited 1.5% cash back. Wow, absolutely crazy. Featured in Wall Street Journals, Nerd Wallet, Credit Karma, Yahoo Finance. Like, wow, this company just seems amazing. 4.0 stars, 150,000 downloads, and still a joke in my opinion. And here's why. Hard to believe, I know. So, applying for the Yendo credit card is as simple as 1, 2, 3. You get pre-approved, you verify yourself in your card, and you have access to your money. Bing, 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 good, you're all set and good to go. Making payments, you get pre-approved, transfer your loan. So you digitally transfer your existing auto loan to Yendo in minutes, and then after approval, you have access to a virtual card while the physical one is on the way. So you digitally transfer your existing auto loan to Yendo in minutes. Okay. Interesting. It uses your car's equity to provide a higher credit limit and affordable rate. Now, it says affordable rate, and this is what it was crazy to me. But we got a lot to get into here. The average limit is $4,400. So this gives you money that's available for you. No impact to credit for pre-approval, which is great actually. Payments are easy, and you get a virtual card as you see. And here's all the reviews. Oh my God, listen to how amazing this is here, right? Oof. All right, let's get into the craziness here. Okay, because this is absolutely wild to me. And I cannot believe that this is actually a thing. Like, it's wild. So, here's what you might get. Car model, Honda Accord, 2014. Car value, $8,850. 112,000 miles. And a max credit limit of $4,690. Car 2, Ford F-150. Car value, $5,000. Doubt it. 2014. A lot of mileage, a little bit of money you get there. Car 3, $20,000 car, max $10,000 car limit. Oh my God, oh my God, I'm getting all this money here. Now, factors that impact this credit limit here. Your credit limit is determined by a variety of factors that include your unique vehicle's make, model, mileage, trim, and year, as well as the individual credit history. We also want to make sure you have the ability to pay back each month. Okay, at least they're being somewhat generous, right? But they're still a business, keep that in mind. Your vehicle is your key to credit. So we look at the year, make, and model and determine its value to give you, and its value to determine the appropriate credit limit. They look at the credit history and your income to expense ratio. That's amazing. How Yendo calculates your payments. You can plug your entering balance into here if you need to. But here's the crazy thing. First of all, they got a fee of $40. All right. Pretty cool. And again, you can click through this and kind of go back and forth if you need to. There's a fee of $40 annually just to have this thing. A lot of credit cards these days don't have annual fees. I have Discover It card. It gives me cash back on my purchases every single day, and there's no annual fee. So starting there. What is vehicle equity? So if $12,000 is owned by the bank, $23,000 owned by you, that means you have $35,000 in equity. So you can talk about that. The benefits, I mean, they say it's good if you fully have a car paid off here, which is crazy. Build your credit, same day access. So if you already have a car paid off, you can get up to $10,000 in credit limit. You can build your credit with online on-time monthly payments, and you have same day access. And if you're making payments on the card, you can potentially reduce your monthly auto loan payment, which is interesting. Getting additional spending power / increase your available credit as you pay down, and same day access as well. Seems like it's a great thing. Here's where, to me, it gets a little bit wild. Okay, let's take a look at the FAQ. This is what actually blew my mind. These are the questions, and take a look. Where is it? Get 1.5% back on eligible purchases. Whoa, right here. What is the APR of this credit card? The APR of this credit card, 30%, 29.88%. I'm sorry, what happened to the affordable, affordable rate? Okay, affordable rates. Okay, that's not affordable. Affordable is like 7 to 10. You're looking at a 30% annual. That's a little bit bad. Okay, no physical stores. Can add a second vehicle. The APR is what threw me for a loop. So this is your APR. It means that if you carry a purchase balance month to month, basically you don't pay off your card in full. It accrues 29.88% over the course of a year. Cash advances, balance transfers, as for interest, your due days at least 25 days after the close, blah, blah, blah. Foreign transaction fees have a 3% fee. Oh, cool. Balance transfers have a $5 5% fee. Oh, cool. Cash advances have a fee. Oh, cool. You also have late payments. Oh, amazing. Awesome. Like, it's just a credit card. This is just a credit card. Now, here's the stupid thing that I just do not understand why you would do this. The stupid thing here, okay? Keep this in mind. HELOCs are backed by an asset. A house, real estate. Value goes up. As time goes on, value goes up. Great. Do you guys know what happens when you have a car and what happens over time? Cars are not assets. Cars are liabilities. So not only are you paying 30% on your credit card, on your credit limit that you got approved for as a result of this. Not only is that, but your car is actually losing value every single year that you have it. I bought my car back in 2018 or 2019. I'm trying to remember what year it was. And I bought it for like $19,000. It's worth like 10. It's worth about half the value that I got in 2019. It's lost 50% of its value. And you're telling me that I have it backed by a car that is a depreciating asset. Not even an asset. It's a liability. Are you kidding me? What is this? Why on earth would I be like, you know what? I want to take a loan out based on my car's equity, and the car's equity is going to be going down because it's a depreciating asset. Oh my God, our mission. Okay, yeah, let's read into your mission, because honest to God, I do not understand why you'd want to do this. We want to reshape the lending industry to help rather than hurt. That's such a lie. All companies like this are here to make money. If you want to help and not hurt, you wouldn't charge 30% APR. You could even charge 20% and still make a crap ton of money. You're charging 30%. We were frustrated by seeing title and personal loan companies hit people with high interest rate and fees, and we knew we could provide a better way. Okay. What are you looking for? Okay. All right. I guess it's because you could refinance your auto loan, I guess. That's what I don't understand here, is that you can refinance your auto loan, I'm guessing, but I don't understand the purpose of that. If you need cash and it lets you tap in equity of your car to get the $10,000 in credit, basically just like tapping into your house equity, but this is a car. Let your car be a financial asset, because we all know it's not. It's a liability. We all know that. I don't know how you can lower your car payment by $306. That's right. Not only can you potentially save on your monthly car payment, you also get access to a line of credit you can use for everyday purchases or keep for emergencies. Okay. Oh my God. This thing, it just makes no sense to me. As someone who's been doing finance now for like 5-6 years now and has done so much reading and research and articles and videos and whatever, a line of credit you could use for everyday purchases or keep for emergencies. What do we think an emergency fund is for, people? And a credit card does not count as an emergency fund. It doesn't make any sense. Do not do that. I don't know what this is. It's like a video. Why should you get the Yendo credit card? Get instant access to a credit card. Woo! We all get those. I guess you can lower your monthly payments with refinancing. But the thing is, though, with refinancing, you pay it for longer. So instead of paying, $500 for 6 years, you might pay $400, but for 8 years or for 7 years, and you end up still paying a lot more. So, keep that in mind. This is also based on the average monthly payment savings when compared to prior auto loans with a 36-month or a 3-year payment period. And I'll tell you right now, a lot of people do not get a car with a 3-year repayment period. It's like 6 to 8 months, 6 to 8 years of a repayment plan for a car. Just throwing that out there. So, okay. Takes about 15 minutes. Amazing. Activate your card. Great. All these really cool things. Your loan, your credit limit. Wow. Woo. Look at the inverting. Okay. Again, available credit is not like you're like saving money. You still got to pay it back. And you're paying 30% if you don't pay the whole card off. But whatever. The more you pay, the more you can spend. Okay. Cool. You can both pay back your loan and spend money through our app at the same time. Wow. Here are 3 quick steps to get your car within 15 minutes. Woo, I haven't even watched this. Share your existing loan details. Cool. And they say, here's the offer. And okay, cool. Transfer your existing loan to get your credit card. So you have to basically give you're basically giving your title and your loan over. I don't know if it's your title because your bank owns your title until you pay it off. But transfer your loan over and basically they will give you a better payment for it, but just it'll cost a lot more over time. When you refinance things, it lowers your payment, but it also will take longer to pay off usually. So like when my car was getting paid off, I kept getting like, oh, refinance it. And it was going to just take a lot longer. But it's good for the short term, but not for the long term. But, Okay, here's your final offer. Wow. $3,700 starting credit limit here. Start spending. Start spending is crazy. Oh my God. Okay, apply now. Okay, yep, cool. Thanks. Refinance your loan and get a credit card. Potentially lower your monthly payments. Potentially. So it's not even guaranteed. Yeah, okay, sure. This is crazy to me. Borrowers can leverage their car equity to access. Okay, yep. Raises $165 million. Well, yeah, they're a business. At the end of the day, they are a business. So keep that in mind. Let me see what what's the reviews. Do we have reviews? Let me go to these reviews here because I'm sure these are awesome. They have 3 reviews, and these were compensated for their honest review of Yendo. Okay. Yendo was quick and easy. I recommend Yendo to anyone who will listen. I'd say at least to try the process, you'd be very happy. That's a very, very vague opinion there. If you're looking for that credit that you've not been able to come up with, Yendo is probably something you're looking for. You can just apply for a credit card if you want to. You don't have to put your car up for equity, in my opinion, but everybody ended through a friend from the start through the application process. Though the funding was very quick and pain-free. Cool, access to money. How awesome is that? If I miss a payment, do I lose my car? We will always work with you to try to establish a plan that works for your situation. However, as a lien holder, we can exercise our right to recover an outstanding balance. But this is our last option. Well, yeah, I mean, that's what of course you're going to say. Well, imagine they said this was our first option. It's like, you don't repay it? Yeah, give me your car. Okay, so last. Keep in mind that with Yendo, your minimum monthly payment can be more affordable compared to other alternatives like title loans. Okay. Amazing. Just build my credit. Well, my credit line B. How many days do I have to repay it? You have 25 days after the end of your monthly statement to make a payment. You can make payments at any time. You'll need to make a minimum payment of 1%. If I sign up, when and where do I get my title back? You will get your title back at any time by paying off your balance. Makes sense. Payment terms. They already went over that. What is over limit? If your balance exceeds your credit limit, your account is over the limit. Wow. I cannot believe that this is a thing. And you get 1.5% cash back, but your APR is 30%. Guys, 30%. That's insane. When will I be charged a $40? And it's a fee. Remember there's a fee? We talk about a fee. $40 fee here just to have it open. Okay. What happens if my car gets repossessed? Nah, this actually, like, these FAQs are actually wild. Like, if you're at this situation, if you are doing this to take your car and get an equity and then just to get some line of credit available for you at 30%, 30, you can get a credit card apply at 24, 25, and it's still cheaper than this. Your car's too much. I'm sorry, but you can't afford a car. We hope this doesn't happen to you. However, in the event of repossession, we will communicate with you about the status of your repossession and give you options for getting your vehicle back. I'm worried about you repossessing my car. We don't want to repossess your car. As long as you're making your minimum payments, your account will remain in good standing. We have systems set up to help keep your account there. We've also set up a variety of payments like debit cards, ACH, cash, Apple Pay, Google, PayPal, and imagine Venmoing for your credit card. Oh my God. What if I want to sell my car? If you want to sell your car, you'll need to close your account. How do I get my title back if I cancel? Can I use my virtual card for? Okay, yep. Oh my! I honestly just can't believe that this is actually a thing. I'm just so shocked. You see my credit limit. What is my credit limit? When I receive my statement? When should I receive a physical card? How can I make a cash advance? Miss a payment? If I miss a payment, will my car get repossessed? Oh man, how do I know you guys are legit? We've helped thousands of people access affordable credit since 2021. We're a MasterCard credit card, and we're partnered with the FDIC-insured bank and all 3 major credit bureaus. The Wall Street Journal, TechCrunch, Credit Karma, and a bunch of other major publications have written about us. And also, we have lots of reviews online that you can read about. Why should I trust Yendo? Basically, the exact same thing, just copy and pasted. I don't feel comfortable sending my title. You'll have to access it. Okay, when do I know it's my title? Since the credit card is backed by your vehicle, we need to have the title to place Yendo as a lien holder. Wow, amazing. Do I need to send my title? Do I need to print my shipping label? How do I send my title? Oh my God, this is insane. So guys, again, thank you guys so much for watching today's video. Again, like I said, this might be the stupidest video I've ever seen in my life. Imagine that you are getting a credit card that is backed by a depreciating asset, like your car. Appreciating asset? HELOCs, home equity line of credits. Woo! That's the way to do it. And you get like 7 to 10 to 12% interest rate. Imagine getting a credit card with 30% APR that's backed by a car that loses value. I'm just at a loss for words, honestly, guys. Thank you guys so much for watching today's video. If you made this far in the video and you haven't lost your mind like I have from watching and reading all this yet, make sure you like the video, subscribe to the channel as always, turn on those bell notifications for all future financial content, whether it's stock market, whether it's options trading, whether it's crazy things like that I found on the internet. You name it, I'll probably cover it at some point, shape, or form. Thank you guys again so much for watching, and as always, I will catch you guys in the next video.